Knowing what each individual candlestick signal represents, such as the doji harami that formed in the overbought condition on Friday or on Thursday, was confirmed with a very simple rule. The rule of the doji, which is the prices are usually going to move in the direction of how they open after a doji. The lower open on Friday and the close below the T-line show that there's probably a reversal has occurred in the Dow. This was also confirmed with how the NASDAQ traded on Friday. After a couple of dojis, right here at the same level the markets topped out before, followed by a gap down. And remember, one of the highest probability trade setups is a doji followed by a gap, which is your best friend. That's telling you not only after a day of indecision, when they gap it down, they've told you exactly what that decision is, and it's a very strong selling decision, which now makes the probabilities that if this is the top, they might be in a trend channel coming all the way back down to the bottom of this trend channel. Other indicators you can put on a chart is your Fibonacci retracement number or the moving averages. But the fact that they did a doji followed by a gap down with stochastics in the overbought area starting to roll over was an extremely high probability indication that the sellers had taken control and that we're still in a downtrend. And another major indicator that tells us whether we're in an uptrend or a downtrend is our T-line, the 8 exponential moving average. So as we can see in the Netflix chart, once it got up here in the overbought area and gapped up, that's when we start looking for a reversal. And the strength of the downtrend was more illustrated with a left-right combo and a close below the T-line. Today's trading even revealed more selling strength, even though it traded up slightly on the day. Notice what happened. It came right up to the T-line, 50-20, and failed and traded back down to this level with stochastics not near the oversold area, which means if they open lower, which will also be a function of the market opening lower and the stock opening lower, we're still in a downtrend, probably to the point where this becomes your downtrending support area. This was your trend channel top up here. You could draw a parallel line through these tops and a parallel line through the bottoms and get where your next target could possibly be. And the downtrend in Tiffany's was revealed when you had an evening star signal and it closed back below the T-line, telling us that they couldn't get up above the T-line. They did a strong sell signal, the morning or the evening star signal, and this is where you observe the obvious. The obvious was we're in a downtrend, and every time they come up and see another sell signal, they're heading down further. This is not rocket science. This is just graphically analyzing what happens in human nature time after time. That'll be it. We'll see you in the chat rooms.